Thank you for that warm welcome, Marcel. That was very generous of you. Of course, I'm not the only person on this panel. The real experts are the ones joining me, and they will introduce themselves a bit later. But thank you for joining us on this session entitled Bridging Traditional Finance with Tokenized Deposits. We've heard quite a bit about stablecoins, CBDCs, both wholesale and retail. And now we're going to maybe touch on tokenized deposits and their role in not only traditional finance, but perhaps modernizing traditional finance using this instrument. So, of course, the stakes are enormous. There are potentially trillions that could be ported onto distributed ledger technology. And but we have to, of course, first outline very key aspects, that being interoperability, regulation, and, of course, building systems that balance both innovation while ensuring financial stability. So today we've assembled a stellar team of experts to unpack this topic. It's a very important topic, of course, because tokenized deposits hold great promise, potentially, especially in light of the rise of stablecoins, which have stolen the show of late. And I'm sure we'll talk about stablecoins as well a little bit in this discussion. But before we get kicked off, perhaps let me ask my esteemed panelists to introduce themselves, maybe starting with you, Claus.
Yes, my name is Claus George. I'm working for the Z Bank, and I'm trying to bring commercial bank money on DLTs.
Hi, everyone. Oh, it's working? Yes. Marcy Dumitrescu. I work at R3. We're an enterprise technology company, probably best known for Corda, which is our permissioned DLT. We're live with over 60 production use cases, some of which are present today. And we also have out-of-the-box digital currencies, tokenization solutions that cater to CBDC and tokenized deposits.
Manfred Richels, now working for the German Saving Banks Association since 4 weeks, former times for UniCredit, more than 20 years, also exploring possibilities to make deposit tokens available on blockchain for our customers.
Hi everyone, I'm Tony McLaughlin, 30 years working in TradFi, and now have founded a stablecoin clearing system.
Great. I'm sure they didn't really need an introduction, but for formality's sake, we did. So let's get things kicked off. Let's set the stage. Maybe let's start with just a clear definition of what tokenized deposits are, so that we make sure that we're all talking about the same thing, because there can be a little bit of ambiguity when it comes to these things. Maybe, Marcy, could you take us through what tokenized deposits are and how do they differ from traditional deposits and some of these other digital money forms? And then what role does the DLT technology play in the management of tokenized deposits?
Yeah, absolutely. I think we could probably spend a whole panel talking about the differences, especially between tokenized deposits and stable coins and wholesale CBDCs. But I think, for the purposes of time, I'm going to look at these through kind of three lenses. Firstly, it's who are the issuers, what are they backed by, and what regulatory frameworks underpin kind of each of these forms of digital cash. So with tokenized deposits, it kind of says what it does on the tin, right? It is a tokenized representation of commercial bank deposits on a DLT or blockchain. It is fractionally backed, like traditional deposits, backed by deposit insurance. And a very important aspect, an interesting aspect, especially for commercial banks around tokenized deposits, is that in most regions, they are covered by the regulatory frameworks that underpin traditional deposits. So this kind of clarity has been super clear, especially here in the EU. MICA very explicitly states that tokenized deposits are not considered, a crypto asset, and that they're covered by the Capital Requirements Directive. And I think that kind of regulatory clarity is very important. Conversely, when we look at stablecoins, in terms of issuers, it most commonly tends to be non-bank entities who issue stablecoins. Of course, we do have some examples of bank-issued stablecoins, but they haven't quite proliferated as much. And of course, these are 100% backed by HQLA, right, which is slightly different to how tokenized deposits are. And they're underpinned by these kinds of novel and emerging regulatory frameworks. So, MICA has done a great job in terms of defining, asset reference tokens and e-money tokens and the likes. We have the Genius in the US, which is trying to also provide more clarity around who can issue stablecoins and how they can be issued. And of course, there's movements in the UK with SIFMA as well. So I think, an important distinction between tokenized deposits and stablecoins is really where liability lies. Tokenized deposits are a liability to the commercial bank, whereas stablecoins are a liability to that non-bank entity that has issued them, the issuer itself. And that has a lot of implications, when it comes to the likes of redemptions, but also transferability of those as well. And we talked a bit about how wholesale CBDCs could potentially be hugely complementary when it comes to private digital currencies. And so I think there's a lot of interaction that can happen there. And then finally, wholesale CBDCs. We've done a lot of talking about that today, but it is issued by the central bank, a tokenized representation of central bank money, and I think there's been concerns often with retail CBDC, especially potentially disintermediating bank deposits, and there's been kind of design choices there in terms of applying limits on those to potentially prevent that. But I think that in commercial banks in general need to start thinking about how they can participate within the digital currency space, and tokenized deposits potentially provides an interesting opportunity for that.
Great, nice comprehensive overview. Thank you very much. Now let's move over, because we've heard quite a few, discussions around maybe commercial banks launching their own stable coins, sometimes being averse to, CBDCs, but also being an integral part of the distribution of CBDCs, given the correct, remuneration framework or incentive framework. Maybe over to you, Tony. What are some of the motivations for commercial banks or incentives to develop tokenized deposits, maybe over stable coins, or just in general, actually? Why would they look to something like this?
Just simply to serve their customers. So, the way I think about a blockchain is it's just a venue. So if a bank's customers want to transact on Ethereum, for example, if the bank can't service those customers on that venue, then someone else will. So the reason for the reason for putting a bank branch on a high street is because that's where customers do business. The reason for putting a bank onto the internet is because that's where people do business. The reason for putting a bank onto a blockchain is because that's where people presumably or potentially want to do business. So simply, the point is that if the bank isn't in the same venue as their customers, then their customers are facing a vacuum and have to work with someone else.
So it's customer demand. That's where the customers are, and we'll move to what they are requiring. Okay, pretty straightforward, I guess, right? But I want to talk about some of the use cases, because if it's just money that is on a different platform, a different highway, why, right? And maybe I can come to DZ Bank here, Claus. You guys have been involved in machine-to-machine payments, or offline, in fact, utilizing tokenized deposits. So what are some of the business models that you've identified potentially, or use cases rather, and how can programmability of tokenized deposits through smart contracts leverage truly novel financial products and services? What have you seen through your trials and explorations?
Yeah, the CBMT is clearly targeting at corporates. Yeah? I mean, it's targeting corporate use cases, and we want to provide the money where they want to do the business. It's about the venue, just what Tony said. I mean, we have been approached by our large corporate customers, some of them, and clearly asked, okay, we see a large potential in using DLT to getting things more automated than today, saving costs, but we have a problem paying. When we do business, we need to pay, and when we started to think about, okay, how can we probably solve that? And the idea is pretty simple. We just bring our money to the same venue where our customers are doing the business, because we heard a lot about interoperability problems today and standards and such. And I think it's pretty easy to just generate some benefits for the customers, because when we went out and asked them, okay, where do you want to do, which DLT want to use? And the answer was Ethereum or R3. That's it. I mean, I'm a bit sorry for everybody else, but this was the answer. Really easy. And when you look at the Ethereum space, when it comes to standard, they have an easy answer. They are ERC20, ERC1155, ERC1400. So we tested these three, and we found ERC1155 is okay for us to press commercial bank money into this. So we can use the existing standard in this space, and that's what we did. We did a test run, and it proved that these ERC1155 with commercial bank money, the CBMT, works as money from a functional point of view. What we are not now trying to do is getting BaFin to say, yeah, the way you set it up is okay, you can use it in production mode.
Okay, interesting.
Maybe just to compliment on this one, as you said, customers' wishes are quite clear. They want to put their business more on this new type of technology to create synergies on that one. And they're not looking for sophisticated functionalities of money. They just want to have the same money they're using today for their business also on the new technology. That's what they are looking for. And that's super important for them, because finally they're looking for having exactly the same features of money available on the new technology. They don't want to get to know a new legislation. They don't want to talk to their auditors and try to understand how to do the accounting for this kind of money and and so on and so forth. So they want to keep the existing features of money on a new technology. And that's exactly what deposits tokens are about.
Great. Nice, consolidation there. But I want to stay with you, Manfred, with regards to, the rise of stablecoins. Okay, so banks want to issue stablecoins, some of them want to, but then you also have the tokenized deposits. What's really the benefit here? Is it the easier transition, perhaps? And then also, we had a bit of a discussion outside about the wholesale CBDC. How does this tie in, and does this render tokenized deposits a little bit obsolete, or is there still room for that specifically?
Yeah, let's start with the stablecoins. Stablecoins, at least in Europe, are with MiCA quite well regulated. So you know exactly how to set up a stablecoin under MiCA regulation. And therefore, it's quite easy doing that. For the commercial bank money tokens, so tokenized deposits, it's a bit more complex. Because yes, we have existing regulation, but they do not serve automatically for the new technology, which means there's a harder way to go to make this part available. The good news is banks can do that. They are on this way, and for sure, if this will be approved by the regulators, then this is the way to go, especially for those corporates because of the needs mentioned before. Talking about the wholesale CBDC, it's a super important leg to mitigate finally the settlement risk. So it would help banks to even more focus on the customer needs because there's no settlement risk behind the processes. Similar to what we currently have with payments, it would even better work than with CBNT and a wholesale CBDC settlement leg.
Great. Now let's have a look at some of the hardware, or let's say the technical underpinnings of this. There are different, obviously, DLT choices that are out there. You mentioned R3 and Ethereum because of its Ethereum request for comment standards, ERC20. I'm actually a bit curious about the scalability, actually, that you spoke about, and transaction throughput, but maybe you could illuminate us on that topic. But before I get there, just in terms of public permissionless DLTs, I mean, we saw the paper recently by Ulrich, who was here yesterday, and then and his counterpart. How can commercial banks meaningfully participate in public permissionless DLTs while still, implementing guardrails that are, and all the other requirements in terms of regulation and these types of things, and interoperability? So maybe I would like to put that to you, Claus, and then maybe Tony and also Manfred, if you want to add something.
Yeah, the interesting thing is none of our customers ask for it. None. So why should we? Why should we go to public unpermissioned DLTs right now if there are none of our customers doing their business? I don't see it. Yeah? So we will start where the customers want us to start, and this is with permission blockchains or permission DLTs. In the current project phase, we are trying this out on the European Public Network as well as on the UDPN. They joined our team. I'm very happy about this. And we will see how it works. If our corporates would ask us to go to a permissionless blockchain, we would really consider it because they don't see a fundamental difference in it. I mean, the commercial bank money token is just commercial bank money in a different technical form than today. So it is a restricted asset because as today it is restricted to customers of commercial banks, and this just stays. It stays the same. And I don't think this is a primary feature of permissionless blockchains. So why should we go there?
Yeah, look, it's a good question, and without making a judgment about whether people want to use public chain or not, let me just give you the impediment. The impediment is that if you work for a bank and you are doing any kind of outsourcing, you have to demonstrate that that's a responsible outsourcing. So if you look at a public permissionless blockchain as being an outsourcing, you've got a big difficulty because there's a process within banks called third-party risk management, which is essentially a long questionnaire. And if you want to outsource to Ethereum, there's nowhere to send that questionnaire.
Vitalik Buterin has an email address, I think.
Well, potentially. So here's the first thing, which is the bank doesn't know where to send the questionnaire. The second thing is that one of the reasons why banks have been prevented from using public permissionless blockchains is because bad things can happen on them. But coming back to the earlier analogy, bad things can happen on a high street and bad things can happen on the internet. And we don't expect the bank to be responsible for all of those bad things that happen in those venues. So I think the way forward is this, which is number one, regulators have to give clarity about whether banks have to apply traditional third-party risk management to public permissionless blockchains. If we get past that hurdle, then the next thing to distinguish is between what are the risks that we expect the bank to mitigate on public permissionless blockchain, and what are the risks that they cannot be held accountable for or responsible for. Because there is nothing a bank can do if a fork happens. So we have to recognize that a fork is like force majeure or an act of God. You can't hold the bank responsible for that. Again, like the bank on the high street, if I put a bank branch on a very dangerous high street and someone takes out money and walks down the street and gets mugged, that's not the bank's responsibility. So I think the way forward is be very clear about what we're asking banks to be responsible for, and don't expect them to be responsible for the uncontrollable.
Great analogies there. Anything to add, Manfred?
As said, we are currently looking for a B2B business first. Yeah? And I haven't seen any corporate asking in a B2B space for a public permissionless blockchain. That's the only point to say on this one. And I have doubts that they want to get these compliance issues, because they have exactly the same obligations as Tony mentioned for banks.
Okay, great. Maybe let's turn to the technical experts from R3 here. What would the motivations or choices, what would inform whether a bank chooses public or private? And then how could we potentially, ensure interoperability between existing infrastructure and, the DLT infrastructure? And then what role do standards play here? Because if everyone's going to have their own private blockchain or private DLT, let's say more correctly, would there be needs for standardization, different banks, different DLTs, etc.? What sort of complexities are involved in that?
Yeah, I think this is one of those things that kind of keeps me up at night because it's such an important question, especially on the interop side. And in terms of that, I know Nick has done a fantastic job in the previous panel discussing interop, so I'll hopefully try not to repeat too much of what he said. But I guess on the public and private side, there are banks who are experimenting with both. I don't like the term private, but permissioned blockchains and public blockchains, right? Obviously, being on the permission side, I'll be a bit more biased on what we can do there. But on the public blockchain side, there are a lot of benefits, right? There's the openness of it, the access to a massive, liquidity pool. There's like $210+ billion in stable coins that you can access. There is, the ability to kind of take advantage of the network effects and the composability. So a lot of benefits there. But when it comes to building applications for regulated financial institutions, that's where you do come into issues around compliance and data privacy and bad actors, as Tony mentioned, and so that is where traditionally permission blockchains like Corda, like Besu, and the likes have come into the fray and have really tried to kind of reach those requirements and create those use cases for the regulated institutions. But I think the crux of it is that we can't make the assumption that everyone's going to build on the one chain, right? There isn't going to be one chain to rule them all. And I think, especially at R3, we've really been very open about this, and we want to interoperate with whatever value ledgers or networks that our customers need to interoperate with. And so interoperability between different permissioned ledgers is very important, but also between public and private. You have billions of dollars in tokenized real-world assets sitting on private chains that could really be plugged in and used on public chains. And there is a demand for stable investment vehicles in public chains. I think interoperability between the ledgers and blockchains and traditional systems like your core banking systems, right? You're not going to start tokenizing native tokenized deposits on a blockchain on day one, right? There has to be a bit of a transitionary period there where you can, kind of take your organization on that journey. So I think those things are really important, you know, and when we look at how tokenized deposits can interoperate with other kind of digital cash or digital asset systems. You know, there's a couple of architectures that have come out. You know, there's the unified ledger model where, you know, the BIS and a couple of others are really pushing forward in terms of having, you know, all of these digital cash, if it's tokenized deposits, wholesale CBDC, on the same ledger, right? And there's great benefits there in terms of composability and atomicity, but you're also assuming that everyone's on the same chain. And then there's the other view of, you know, kind of like a network of networks, or almost like a multi-asset FMI, where you have different permissioned ledgers that interoperate seamlessly with each other. And there's so many kind of interoperability solutions out there. You know, we've recently partnered with Onera, and we've also revived Hyperledger Harmonia and Cacti, which looks at our interoperability between Corda and Ethereum. So yeah, I think seamless interoperability is absolutely important. And I think, you know, some of the previous panels made comments around standardization and how important that is as well. So yeah, and ultimately, I think all of these forms of digital cash are super complementary to each other, and you need interoperability for them to actually scale and be successful. And that's important for tokenized deposits, you know.
Maybe to be a bit more provocative, you have no interoperability problem with commercial bank money tokens, because it is running exactly on the chain where the customer needs it. So there is absolutely no interoperability problem to solve. The only problem you have, because commercial bank money tokens are issued by several banks, is a fungibility problem, which is a totally different story than technical interoperability. So with the tokenized deposits, I doubt that you have an interoperability problem.
I would make a small argument there to say there's definitely a fungibility problem, but if you have a scenario where your tokenized deposits exist and live in different or disparate chains or ledgers, then they do need to some extent some way to be able to communicate with each other and kind of cross those borders. But it depends on how you look at it, I guess.
Yeah, exactly. It's dependent on the need of our corporates. And currently, as said, they do not need it. And by the way, there's always a quite simple solution to this problem. You use your normal commercial bank account and use this as the, let's say, cash leg. That's the easiest part. So it's not really an interoperability problem to be solved with commercial bank money tokens.
Claus, did you want to say something?
Yeah, exactly. I mean, Manfred and me, we're working together for a few years, so it's exactly what he said. Yeah.
Oh,
I mean,
are you ganging up on Marcy?
It is a restricted asset. It is a restricted asset. Yeah? So one of the nice sides of this is that everybody using it has an account with the bank, so you can use just your normal bank account as a bridge. Marcy is right in the sense that if you want to have the commercial bank money token on an unsupported DLT, for example, you need interop, of course. Yeah, you need interop because the banks will not probably supply each and any DLT. I mean, you all know how it works. We look where our corporates, where big corporates, where it's real business, so we are going to support these DLTs. If you are on a smaller DLT, which is not directly supported with the CBMP, you have an interoperability problem, and for example, R3 is here to help. I like the idea, really. I'm not kidding. But this is not a problem that banks should solve, in my opinion. We have specialized companies for that.
Okay, so now that we're talking about problems,
more solutions.
Let's talk about problems, right? So what are the problems that you do face when you're looking to move to tokenized deposits? From a regulatory perspective, besides technical, what are some of those challenges? Tony, you can also join in here if you'd like.
Yeah, well, there's one fundamental problem which could be considered as being either a feature or a bug, and I'll kind of illustrate that with this, which is my cloakroom token. Now, this cloakroom token isn't my rucksack. My rucksack doesn't fit in my pocket, so it's a more convenient form of holding my rucksack. Now, it's possible that I could transfer this token to you, and then you can go and claim my rucksack. But that's not how a deposit works. Stablecoin works in that way, which is the holder of the token owns the asset. A deposit isn't like that, because a deposit is a relationship between me and my bank. And a deposit between Klaus is a relationship between him and his bank. So you have to do an extra step. If you're transferring, you're not transferring the deposit token between me and Klaus. What you're doing is you're destroying that token and creating a new token for Klaus between him and his bank. So call that a feature or call that a bug, but the difference between a stablecoin and a deposit token is that the stablecoin has that bearer aspect and the deposit token does not.
Very apt, appropriate example. Do you see any other problems, Manfred, while we are on the topic of problems?
It's exactly like Tony said, and also the regulation is very different. And as the MiCA in Europe was specifically built to create something like a stablecoin, it is not the case for the deposit tokens, and that's where currently we have the discussions with the regulators to ensure that deposit tokens are really seen as deposits. We are on a very good path there, but finally this is exactly the questions we need to answer, that we are under a complete different regulation and see this really as deposits in another technical form rather than a different animal.
And another thing, I mean, we are offering a new form of money because we think it's much more suited to do the business on the DLT. On the other hand, the problem is, for the corporates, they have to do their business on the DLT. I mean it. I mean, we run our tests and we found out, okay, it works, but how do you integrate corporates, the DLT, into the existing business processes? What is about the billing process? What is about the procurement process and so on? Because this is all not needed. I mean, you have an atomic swap between an asset and the money. You're done. And they are just not used to do it this way. And so they have to transform the way they're doing their business, because what we are really aiming for is a unified ledger in the sense there's money as one asset, yes, but all the other assets are not probably financial products. It's a machine doing some kind of work, a robot or something like this, or the right to drive a car. You go on as you want, yeah? So the corporates have to adapt to this and have to change a lot of the business processes, actually. And this is not done easily. Huh?
Interesting. We do have some time for questions, perhaps, from the audience. But before we get to the questions, are you guys comfortable with that? Before we get to the questions, I'd like to maybe just ask each of our panelists to have a single takeaway from this discussion and the future of tokenized deposits. Let's start to my immediate left.
If there's anything you took away from this discussion, please remember tokenized deposits are deposits. Thank you.
You stole I was going to say the exact same thing. No, but absolutely. I think tokenized deposits are a really interesting way for commercial banks to start leveraging DLT in a very tangible way. But I think one of the most important things is creating use cases that add value to your end customers and that actually make your users want to use them. They fix a problem, they fix a pain point, and it's a tangible outcome for them.
Yeah, if there is a demand for stablecoin, there should be even more for commercial bank money token.
Oh, wow.
My suggestion is it's become very clear to me that lots of people have got opinions about Bitcoin without having read the Bitcoin white paper or ever having transacted in Bitcoin. It's very obvious to me that many people have got opinions about stablecoins. They've never transacted in a stablecoin. So, if you want to raise ducks, you can get a consultant to come in and give you a presentation about ducks. You can read it on the internet, or you can just like try and raise a duck. You know, if you want to understand what a stablecoin is, download one of the wallets, Phantom Wallet, MetaMask, transact in the stablecoin, and then you will understand what the real thing is. Again, it's very clear to me, and I'm afraid I've heard many speakers today talking about stablecoins, and it's perfectly clear they've never received a stablecoin. So let's not have opinions about things. Don't have an opinion about a duck based upon a picture of a duck.
Okay. Thank you. Very interesting. Maybe just a few questions. I think there will be quite a few. There's some hands flying up there.
So tokenized deposits are deposits, fine. So deposits between banks are cleared through central bank money, actually, through an RTGS. The benefit of tokenized deposits is that they could potentially become 24/7 because deposits are not. Transfer of deposits are generally not. Do you believe that in order to enable that 24/7 tokenized deposit transfer from bank to bank, you need to have a wholesale CBDC to do the clearing, or it can be done differently? It's to anybody, really.
I mean, it would be great to have a wholesale CBDC, which is available around the clock, yeah? But the CBMT is designed to span several currency regions. So we are multi-issuer, multi-FX, or multi-currency, yeah? And when we started designing it, we made a few decisions, and one very important decision is it has to work with the settlement methods that are out there now. And we started 4 years ago or so. So we are prepared to function with the current settlement process, but we would be really happy to have a new wholesale CBDC issued by ECB, and yeah.
Okay, thank you. Maybe I have to stand up. So my name is Deji, and I'm a fellow of the Digital Euro Association, and also the issuers of Naira-backed stablecoin. Very strange, but that's Nigeria, Naira-backed, regulated Naira-backed stablecoin. And I thank you with what you said here, because it's been theory, and I'm living where stablecoin is practical in Africa. I used it yesterday, and in a very, very unlikely way. So I have 2 kids, and I send money every month for upkeep, right? And I did it right here in Frankfurt with my stablecoin dollar, and I sent to the local one we issued, which is the Naira-backed stablecoin CNGN, and whoop, to my wife's account, it went in Nigeria. And that's like what stablecoin does. And with the local one we have, for example, when we started, we just launched. And when we started that, there's this company in Nigeria called InterSwitch. They are actually the first unicorn in Nigeria. And they have this card scheme where they issue cards actually bigger than Visa in Nigeria, bigger than MasterCard. They've issued over 80 million of those cards. But this is the unique part. The card does not work outside Nigeria. So if you step outside the shores of Nigeria, I have it in my pocket here, but I can't use it to buy anything here. And they say, look, this is how we can use this local stablecoin we just issued to power what you have. And we've been invested into by Seco, and we also have investment by Coinbase Ventures. And what we're saying is, can we handshake this local stablecoin with your dollar stablecoin and make it usable? And so we just have the liquidity providers, market makers behind the scene and make this work. And so we're talking to orchestrate that. And I think stablecoin is very useful, and I think it's great, and I think we should use it before we comment. And I agree with you 100%. My second question, the question is this. What is actually the difference between the deposit, tokenized deposit, and the CBDC? So in Nigeria, again, I have a practical example. I'm involved with the central bank. And they started with the retail CBDC, the e-Naira. Of course, it's a fantastic failure. And the reason is very simple. The banks decided to lock their doors against that retail CBDC because they think it's taking deposit off the bank, and automatically I become the customer to the central bank. And we have a lot of issues because the central banks, So time.
Sorry, we discussed a short question. I have to interrupt you here, but I think the question, if you could answer it really briefly.
The question, again, this is a token is just a representation, and it's a representation of a promise to pay, and the promise to pay can either be on the balance sheet of a regulated non-bank, which is fully collateralized, or it can be a representation of a liability on a commercial bank, or it can be a representation of a central bank balance sheet. So the token can actually represent different liabilities and different balance sheets. And so there is, I think this is a mistake that we're making. We are looking at the stable coins that we see today and the CBDCs that we see today and the tokenized deposits, and they all look different, but soon they may all look the same. And the key thing that needs to happen to make them look the same is that you can redeem them all at par value. That's called singleness of money and cash equivalents. So I think my prediction will be that going forward, the distinction between central bank, digital currency, tokenized deposits, and stablecoins will disappear. You will have tokens that can be redeemed at par value on demand with different issuers.
Great. I think we are at the end of the session. Is that correct, Marcel?
I think we can do another question if I'm double checking with the agenda. I think we can do another question.
Okay.
If it's a short one, I
have
want to
one?
re-emphasize.
So first of all, a comment. So we announced together with SAP that we allow our invoices to be paid in stablecoins with the PayPal stablecoin. So if you look for a client on public blockchain, then here we are. So second question is, I mean, we heard this morning Mrs. Hachmeister talking about, let's say, the Eurosystem view on their, let's say, priorities from wholesale CBDC down to stablecoins and commercial bank money tokens. So what's your view on that? Specifically, I mean, Manfred, you talked about we need to have clarity. It didn't sound for me that way, that we might get clarity from the Eurosystem or, yeah.
Yeah, on the wholesale CBDC, I think the way to go forward was clearly announced by the ECB. Therefore, we are now pushing them to get a wholesale CBDC solution as soon as possible, because this would help for various use cases. It's not only something which is really important for CBMT, but specifically important for the asset settlement. Therefore, I think that the Eurosystem is giving priority to this is of utmost importance. About the others, I don't want to talk about the digital euro today, even if I could for hours. I think it's important now that, especially in Europe, private solutions and especially issued by banks need to speed up, need to come and to really get adoption to the market.
Great. And I think with that, we're at the end of our session. Enjoy the rest of the program, and thank you to our experts.